Hello everyone, welcome back to the Decentralist. Say hello in the chat, unless you're feeling really antisocial and you just don't feel like talking at all. Let's start off with the boring technical stuff. How's the volume? Because normally I've not asked that until sort of later on in the stream, and then later on it turns out the music's too loud. Hey Robin, hey Marcus, good evening, happy Wednesday. I had to look at the thing and find out what time it was, what the day was. Give everyone a little bit of time to show up. I'll tell you what, while I'm waiting for everyone else to show up, I'm just gonna have a quick game of chess. This is just to wait for everyone to show up. Who thinks I'm gonna win? Volume's fine, cool. Yeah, who thinks I'm gonna win this? Hey Jiv Jenna, good to see you. This is not going to be a chess stream. Marcus thinks I'm going to lose. Yeah, all right. He's going to move the horse here. I know what he's up to. Hey Fatima. I'm going to have one game and that's it. This is not a chess stream. And this is like a quick game. Queen's Gambit. No, he's not doing a Queen's Gambit. Oh, you're referring to the that TV show. He's taking his time. Anyway, good evening, everyone, or good afternoon, if that's the time zone that you're in. Hello, Shirley. So, what's the vote? Marcus says I'm going to lose. What's the vote? Who thinks I'm going to win this game? Who's got confidence in me? This is a quick game. This is not going to last long. Hey, Chris. Hello, Tony. For people just showing up, I'm just playing chess while I wait for people to show up. So today, again, we're going to look into Bitcoin, obviously. That's what we do every day. And I don't know if you saw my post in the network. As soon as we finished the live stream, Bitcoin did what I was, not saying it was going to do, because I never talk in that kind of language, but it did something we were kind of looking at, which I think was quite cool. So what's the vote? Marcus thinks I'm going to lose, but what does everyone else think? What's he doing? That's not good. Let's just fuck with him a bit. What's he doing? Anyway, how's everyone doing tonight? Let me turn this down a little bit, that's better. Oh, and also, yeah, also the all the decentralized are sold. It's all sold out. So that's pretty amazing. So thank you guys. Most of you are now in the Founders Club, but big thanks to you. I appreciate it. It's a massive vote of confidence. Oh shit! Almost lost my queen there. No, that's not going to work either. Let's do... Yeah, just get it out of the way a little bit. Yeah, so it's amazing. It's amazing. And it's weird, like whenever you've been so focused on a particular goal and then you achieve that goal, there's almost this like little limbo period afterwards where it's like, oh, okay. And even though it's part of a bigger vision, maybe it's because I know I'm like moving to Warsaw in 3 days. So like the headspace is almost like, obviously feel amazing, but there's a bit of like a feeling of like to start the next big goal, it almost, you have to sort of like shift gears. And maybe it's because I've got I'm moving to Warsaw in 3 days. So I've just felt like a bit like like it's almost like you climb a mountain and then you reach the peak. And obviously in this analogy, it's there's higher peaks, but you reach the peak and it's almost like, okay, I'm here now. And you sort of look around and it's like, okay, so you don't immediately start going off. It's like, you just go, okay, you sort of want to, okay. Almost like reward, like commend yourself, like, oh, well done, you achieved that thing that you were striving to achieve. So I'm feeling in that kind of like that space right now, where I feel really grateful and happy that we achieved this goal. But I think I'm gonna have to, and I think like to really just go full onto the next phase, I've probably got to wait till I'm in Warsaw, I think. Robin says, why do you keep moving country? I'm not moving country, I'm just moving from Krakow to Warsaw, so the same country. I originally came to Krakow because I've never been here before, and I'm pretty sure that I want to stay in Poland, and I'm going to Warsaw because I'm staying with some friends of mine, so we're going to be living together in an apartment. But I knew that they weren't going until March. And I didn't want to stay in the UK. So I was like, well, I haven't been to Krakow before. Let's just check out Krakow just in case I like it more. Because if I liked Krakow more, because I lived in Warsaw last year, then it's like, then I might convince the guys to come to Krakow. So it was always part of the plan to go to Warsaw in March. Sorry, I haven't been paying attention to this. Let's do that. So almost done. I've got a minute left. I'm about to run out of time, and then we'll crack on and look at Bitcoin. Another thing that we need to do is have a little bit more of a brainstorm. Think about what might be a good name to replace Decentralized, because Decentralized has been taken by somebody. Look, we might even just call it like the King Silver Lions. I mean, that might be an option. One of the options I shared. Let's have a look. What's he going to do? Yeah, one of the options I shared in the group was like the history of the names, The first one I came up with in the brainstorming session. Oh, did I just lose my queen? What an idiot. Okay, Marcus, you were absolutely right. I did lose, but I was on your side, Marcus. Like, I was rooting for you. The chance of me winning there was more chance of me losing than winning. Put it that way. And yeah. Oh dear. Oh great, that wasn't a good move either. Yeah, let's just quit this. Okay, so yeah, let's just go back to here. Okay, wicked. All right, so let's go into Bitcoin. I'm trying to think if there's anything else I need to update you guys with. I don't think so. Yeah, let's pop into Bitcoin, have a look at what's going on. Okay, I'm going to warn you, my chart looks crazy, but the reason why it looks crazy is because I've purposely not taken any stuff off because I wanted to kind of talk through some things. I want to take some things off, but I want to, just quickly talk through some things before I do take some things off. I don't think we need this anymore. Now we've kind of exited DAO, and I think that we're heading up. I don't think we need this, but rather than delete it, I'll just move it to the top and just sort of start to hide these. Again, we don't need this anymore. And these sliding parallels. Yeah, these are both sliding parallels there. Let's get rid of the volume profile. Oh, wrong one for now. Okay, now a new pitchfork I've added is this green one, but let's add that. Let's put these in a folder. And then this green one and the trend lines, let's move those up. And I'll call this old, and I'll call this one new. Oh, what did I do? New, okay. Now, who remembers where we were yesterday? So yesterday, just before this launched up, right? Marcus has got the probability right then, yeah. Master J, evening people. Hey, Master J. Robin says, aren't we having the Aslan draw? Yeah, but I didn't want to just spring it on you guys because then some people would want to show up for that. So now we've sold out, yes. So, when should we do it? I mean, we can do it tomorrow. You guys want to do it tomorrow? We could do it now, but then it's kind of it's not really fair because we haven't announced it and there's some people that I'm sure would want to show up for that. So, should we do it tomorrow? I'll let you guys vote in the comments. Okay. So what were we saying yesterday? I think we were down in the 1 minute, I think, yesterday, weren't we? Yeah, we were. So yeah, I remember now. Okay, so get rid of the volume profile. Hang on, what is this? The month? No way. That'd be the day. Oh, because this is yeah, that's fine. Everyone's cool with tomorrow. Okay, so oh God, how do I ensure that I don't forget this? Oh, I'm gonna go to my calendar and set a reminder because I know I'll be like, yeah, guys, let's do it tomorrow, and then we'll show up for tomorrow's stream, and I haven't sent an email out or anything, so I need to put it in my schedule. Okay. Then add alarms. Is anybody else like me where if you don't put stuff in your schedule with like all the stuff in my schedule, let's say I've got a meeting, I've got a call, or whatever it is, and I've just put a notification here to email the founders, and I've got an alarm for on the time, 5 minutes before, 15 minutes before, half an hour, and 1 hour, and I do the same thing for every single thing in my calendar. I have to do it that way, otherwise it doesn't work out very well. Okay, great. Okay, who broke it? Who broke it? There we go. Okay, that's not really helping us. Get rid of that. Okay, so yesterday, like this phase shift, sliding parallels, this like shifted geometry in this particular down move was so strong. It's such an amazing example, right? Price failed to meet the median line, right? There's an 80% chance that price reaches the median line. So when it doesn't, you might say, well, maybe Hagopian rule is in play, right? Now, Hagopian's rule isn't like a guaranteed thing. Hagopian's rule said if price doesn't reach the median line, there's a high probability that price, will go in the other direction, at least the same distance. And this is coming into play now down here, and I'll show that in a second. And in this case, price, following the sort of Elliott wave structure 1, 2, 3 extended 5, we got like a triangle 4, and then we can see that this sliding parallel that we add here, we add a phase shift sliding parallel the same distance from the median line outside the upper parallel, and price rejected on that phase shift perfectly. So we think, okay, there's a phase shift in action, and so the next place to add another phase shift is going to be on the other side here, and that's exactly where price finds support once, twice. It goes breaks through and finds support on this sliding parallel, finds resistance on this phase shift sliding parallel, and breaks down. And where does it stop? Where does it finally stop? Bang! It's so beautiful. Look at this. I think I showed you this yesterday, right? How cool is that? And as it breaks through, it comes back down and tests it. It breaks through, it comes back down and tests it. It carries on higher. It comes down and tests it again, up and test it again. It's beautiful, And yeah, so I think, where were we yesterday? That was 9:42, which is 10:42 my time. So I think we were just here. Yeah, in fact, I'm pretty sure we were just here. So if we look at this from an Elliott wave perspective, right? This is wave 3. This is wave 5. We got the divergence we're looking for. I mean, look at the wave structure of this. If you're looking for a long here, and the fact that you've got such beautiful responsiveness to this phase shift. Price comes down here, it gives us that beautiful divergence we're looking for. Look, we've got a wave 1, wave 2, wave 3 with the volume, wave 4, there's the wave 5, and that was definitely a potential long opportunity. We've got an impulse up here, a corrective structure down here. Is that a flat correction? Maybe. And then it's off to the races. So I think that's I'm really happy that we came across this in the last stream, I like to get excited about market geometry, but it's just really cool to see. So let's get out of the 1 minute. We can go back into this later on and let's just back up and go to the 30 minute. And so if you remember, we created both a modified shift, right? We've got this A, and this A is a leading diagonal. Remember we discovered that leading diagonal, a nice clean B, and then we've got the breakdown, and this is an impulse. So we've got impulse, correction, impulse, really nice. And this didn't go very far, right? This didn't go very far. It found resistance around the middle of the this median line, and we didn't get that kind of that really clean bearish correction. Let's change this to a color that shows up a bit more. Right, we didn't get a really bearish structure with, you know, going right down to the lower parallel. It stopped right up here, right, and then it just exploded out. We got a double bottom down here, and we got because we were like I just said, we were watching this, and we saw the structure unfold, the wave 1, the wave 2, the wave 3, the wave 4. Like, we were watching it unfold. We were watching it live unfold, and that was a potentially beautiful long opportunity. And this is where Hagopian rule comes in, right? Because this is a really nice regular pitchfork, right? We've got the P1, P2, and what makes it really beautiful, right? The reason why you can be confident that these are the correct P1, P2, P3 is because, you know, P1 breaks all the market structure. Well, P1 is made P1 not just because of P1, because if we go back in time and you can't see like where P2 is, well then what's, you know, there might still be higher highs and higher highs. What makes P1 what makes you confident that this is P1 is that following P1, we get a massive break in market structure. This move down breaks this market structure, this one, think this one, but it breaks all this market structure. Beautiful, right? And how do you know this is P2? Well, because you also get this strong move up. Now, there's no market structure here to be broken per se, but once you get this move up there, and then it's kind of this move in particular, because we had such a strong move down, we did get this market structure here. So yeah, we did get a break of like some market structure. So that, you know, that's fine. And once this breaks down, kind of like, this is the kind of structure where you're not going to really be too confident about P3 until it's kind of too late. So there wasn't really, I don't think there was really a shorting opportunity here. Plus this one's a modified shift, and this regular one, yeah, this is going to be a tough one to, this would have been a tough trade to get into, because this move here was so sharp. There's not obvious market structure to prove the P1, P2, P3. After the fact, it's easy, right? But that's fine, because we're using this one to for our potentially Hagopian rule. So we mentioned it yesterday, and Hagopian's rule says that if price doesn't reach the median line, then there's a high probability that price will go in the other direction, at least that distance. So I've got my Hagopian target programmed in. Hagopian, let's do like a white one. So that says, according to Andrews, that we're going to reach at least this level, which is exactly what we would expect, right? We've got our, if we look at what's going on here, we've got our, depending on what degree we're looking at, we've got our W in this degree, and we're expecting an X up. We're expecting the X up, and within that X, we've got a W, an X, and this is the Y we're looking at. And look, this looks really impulsive, so I think we've got a really nice impulse there. So this is the A, this is the B, and we've got another C up. So it looks like we are going to reach that level. So Hagopian's rule looks set to happen. So price reached almost this median line. That's why I'm keeping this light blue geometry here, because so far it's been doing really well. Now price has kind of come back into these areas. Look, price stopped just near the median line. It stopped exactly the 50% retrace, although it doesn't really mean anything right now because we are expecting more of a move up. Just out of curiosity, I wonder what happens if we add more warning lines. I can't remember if we did that or not. Yeah, look at that. So it stops. So we should have added that before, actually. So it stopped just at the second warning line. Do we need to keep these sliding parallels up? Do we need to keep those sliding parallels up? Probably. Let's have a look. Well, we don't need this pitchfork here anymore. Now we've got our Hagopian target. We can get rid of that. We don't need that. Do we need this modified shift? Now we've broken out of here. I mean, price hasn't been like really like super responding to it. And by the way, well, I mean, we could add a sliding parallel, but it's kind of too late for that. Hasn't really done anything. Let's add some warning lines just to see. Yeah, no. So I don't think this one's of help as well. Let's just let's make it invisible. Okay, so I'll come back to that in a second. And do you see that price came down and it almost touched this this Virgin point of control, which was from Saturday the 25th. So this was from, what's that, four days ago, something like that? 4, 3, 4, yeah. Yeah, 4 days ago. There was a Virgin point of control here. Price came back down to that Virgin point of control. And this is what's really interesting. And we are going to be covering this in module 22 probably. It's really simple. It's nothing too complicated. And so yeah, so now let's label this up. We've got what degree is that? Subminuet. So is that the end? Maybe, we'll see. And then up here somewhere, maybe that's it. I mean, it kind of, if we, okay, I'll get to that in a second. Subminuet, micros next, okay, nice. So if that was it, then it would be a really steep, which means it would come up like even to the other side, maybe to this. I mean, if it exploded with the same strength, then there's that energy point there. We'd have to go in. We have to go into this correction to kind of get a feel for it. If we can work out this correction confidently, then there could be, I think, a long opportunity potentially. We'll have to have a look. Is anybody looking at the same charts as me? Is anybody else looking at Bitcoin? Has anybody else got anything different than I've got? Okay, let's go deeper and have a look at into this B-wave correction. First, let's do a Fibonacci retrace to give us some retrace targets for that wave B. Yeah, so if it did stop there, then it has stopped kind of in between two key Fibonacci levels, but we need to go deeper. Let me just see if these sliding parallels are worth keeping on. Okay, we don't need the volume profile on right now. Let's just tidy things up just a little bit. Do I need this volume, this VWAP, this anchored VWAP? Is it really helping us right now? No, let's get rid of that. So that was where the sliding parallel was created, and then I created a phase shift, and yeah, it's okay. You can see it's done something, right? Like this is the phase shift here. It's okay. Like we've got some, you know. I mean, to continue the phase shift. Oops. To continue that phase shift, we would. Are we really getting anything? I don't think so. Yeah, I'm gonna get just to tidy this up a bit. I'm gonna just. Oh, what am I doing? I'm deleting something. Yeah, let's just tidy that up a little bit. Yeah, I don't think price is... It's okay. It's okay, yeah. We're not getting like precise... Like price isn't responding to this geometry perfectly. This is a shift. It's not even a modified shift. So there might be better geometry for us. So I'm going to hide that for a second. And let's see if this is going to be better for us. Oh, did I? I thought I hit it. Have I created two of everything? What the hell? Okay. So now I'm just trying to tidy things up a little bit, right? So that's our Hagopian target. Let's do a Fibonacci extension for the W, the X, so we can look for a Y target. Let's just bring these various targets together. Now, question is, do we put the P3 here or here? Look at the difference, very slight, oops. But it is a difference, and it's going to give us different potential sliding parallels. And there's no hard rule here, because these are all, I mean, like, I think it's a difference of like a couple of dollars. So it's pretty much a double bottom. And personally, like if you were doing it, if you did it here, for example, and then you use this, you know, this second touch here as the potential entry, then great. But it's one of these things where after the fact, you can see, well, what does it feel like price is responding to more? Like which pitchfork better reflects the geometry that price seems to be responding to? And I like this one more because it feels like we've got this central axis where price at the moment, at least in this part here, feels like it was oscillating around. But then we've got price kind of coming up and sort of, it feels more like it's hitting that median line better. I tell you what, let's go with this one. Let's be technically correct. Like this is technically the low. This one's like a few dollars higher. Let's just go with that. That means we would have to move that sliding parallel closer, which means the sliding parallel isn't really giving us much. Although that first bounce here is kind of nice. And then the phase shift would be all the way down here, about there, about there. touch higher. And let's rename it to a phase shift. A touch higher again. And a touch higher again. That should be it now. Yeah, close enough. So this is a mirror, right? So it says SP-M, and this is a phase shift. And the mirror is not really giving us anything. I'm not happy about that. So we're not getting the mirror. We can't force things. So, okay, now I think what we need to do is go into this, into the lower degrees and see if we can see anything. Also, let's do a shift and a modified and see if we're getting anything for here. Because what we're looking for when we do stuff like this is we're looking for pitchforks which show us market geometry that price is responding to. Bang! Look at that. And this is a shift, and look how how powerful. Look, prices come down, hit the median line. It's perfectly hit this point right here. So the shift is looking good. So we're going to keep the shift on the screen, and then finally let's just add the modified shift just to have a look to see what if we get anything. Modified. Yeah, not as much. So the shift and the regular. You guys see that? You guys being awfully quiet in the chat. And so there's an energy point here where the phase shift sliding parallel meets the median line of the shift that price has demonstrated that it's responding to, and also down there as well. I'm going to suspect that there's no one watching. It's just me talking to myself. Okay, now we're going to go down into the lower time frame and have a look at this correction. See Vive's here. Vive's the only one watching. It's just me and Vive hanging out. Me and Vive just kicking back. All right. Now we don't need this blue one anymore. We can get rid of that. We can get rid of this. And even though this is cool to see, let's just leave that there, just for fun, just for shits and giggles. 1, 2, 3, 4. That's a nice. I love triangles in the fourth wave. Oops, actually that's fine. That's just. Some beautiful triangles. A, B, C, D, A, B, C, D, E, and then kaboom. Nice. And then here's the correction here. So this is the correction we're looking at here, right? That's what we're going to focus on. Okay, so we've got Chris, Fife, and Shirley. These are the only ones watching. Look at this. What the hell's going on there? Okay, I think the 1 minute is a bit too much detail. We can go down into the 5 minutes, I think. Like if you're not using the detail, it's kind of a bit just too much. Okay. I'll tell you what I'm going to do. I am going to pop to the kitchen and get myself a glass of tap water. Normally I've got bottled water, but I've used it all up. So just give me a quick second. Chat amongst yourselves. No fighting. Pardon me. The wolf pack. Okay, so yeah, we're getting another move down. Like I thought, because I'm a goddamn genius. What's that doing there? 30-minute. Yep, here it comes. Okay, so I mean, this crazy move up and down might be an X. So we've got a WX, and then here's the coming Y. There it comes. There it comes. So yeah, this makes more sense. So I'm going to start, rather than trying to work out the details, I'm going to start from the macro and then work inwards rather than, you know, the other way. So let's start like this. Okay, so let's assume that that's what's going on, and then this is where this is going to end. What level is that? That would be 23,460 and well, it's hit the 50, and the next point, it missed my energy point. Not happy about that. Here it comes. Boom. Look at that. Nice. Where's my B? So this phase shift is not doing anything. Let's get rid of it. So the sliding power, there's no, it looks like there's not any phase shifting or mirror sliding parallels going on here. So this lower parallel is the next sort of thing. Let's look at if there's any interesting points of control. I mean, there's I guess. There's 2 days of points of control right here, so that is actually quite interesting. See that here and here. So the price over the last 2 days, discounting today, has been this price level here, and that coincides with the 61.8. So that's kind of interesting. Nope. Nope. Sorry for zooming in. There we go. But I'll keep it there anyway, just to see, you know. Oops. I mean, maybe price is not going to break through it. We'll have to go down into a lower time frame to have a little looky look. That's not helping us. But you know, this is the lower. Actually, this is the lower parallel. That would be the first like potential resistance area. So, I mean, like, taking a long from here wouldn't be terrible. The thing is, like, where do you place your stop loss? And it depends on what your style is as a trader. But given what our hypothesis is, what our analysis is saying, now it's broken down outside of our corrective channel. Again, that can happen. It's not a big deal. But because it's broken out the channel, like taking a long down here, it is really a stab in the dark, because there's nowhere to place the stop. The area of the safe area for the stop is like down here, you know. Now if this was like channeling sort of really nicely, and like this is just a vertical line, and you know, it's just catching a sharp dagger. So I know some of you might be thinking, because we're expecting this move up, you're thinking, oh, if I can just catch this. And I'm not going to tell you not to, but I kind of am. Master J says, I'm here too, was doing something else and listening on the headphones. Giuseppe here too. Cool. Okay, all good. I just need constant validation, that's all. But, God, let's look at this. What is going on? Well, let's just start with some hypotheses. W, X, and is that what? So W, X, Y. I like that. That makes sense to me. So forget the degrees for a second. W, X, Y. So a W. Wait. W, X, Y. Okay, so that's the W. Massive is an X. A, B, C, D, E. A, B, C, D, E. I mean, we might need to go into the... Oh, this is the 1 minute. Jesus, okay. Well, either we've got just a like a boom, an X there, or we've got a... I was going to say, okay, again, hypothesis, start of the hypothesis, and then, you know, so I was going to say, is this an A, a B, a C, a D, and an E? I mean, it's pretty weird. See how fast I feel rushed, because look, all this stuff's happening in the 1 minute, and when you're a swing trader, you're not as rushed. You can just chill out, take your time. I mean, look, that's kind of A, B, C, D. I mean, it's weird. It's weird. But I mean, look at this. It's like da 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 da. It feels like that's a correction right there going on, you know. I wonder if this is because look how impulsive this looks. I wonder, rather than a W, X, Y, if this is an A, a triangle B, and then an impulsive C, and then this being a leading diagonal. If it is, we're seeing tons of leading diagonals, which is kind of cool. Like an a 1, a 2, a 3, a 4, a 5. So it'd be kind of like this. I think, yeah, I kind of like that. Because look at it, like, you know, we can only, this is why, again, leading diagonals are an absolute pain in the arse to identify as they're happening. But what leads me to that is the fact we've got this sharp impulse on the last leg of this correction. And so it leads me to believe that, this is micro. So this is micro, so within this is going to be sub-micro. So all of this, that means this is going to be sub-micro. That is sub-micro. Okay, it's labeled correctly. Okay, so that means this is going to be, minuscule. So, yeah, so what we can do... we can go 1, 2, 3, and then 5. Minuscule. And the reason why these are colored differently, by the way, guys, is that my impulses have a color set and they're slightly different than my corrections. So yeah, I kind of like that. 1, 2, 3, 4, 5. This is all corrective. We got this crazy kind of, you know, X wave, A, B, C, D, E. It works. It's not breaking any rules. And then it also means that because this is now the X stopping here, look at this. Look at that. Huh. Actually, no, it wouldn't be quite as perfect because the W would stop here. But interesting. Very interesting. So if that's the case, then look, is this another leading diagonal? I mean, it would mean a very small wave to retrace. 1, 2, 3, 4, 5 strong retrace. That's not bad, actually. What is that retrace? Oops. Yeah, it's a 50% retrace, I think. Yeah, exactly 50% retrace. You see that? Oh, you will see. You will see. Right. Let's count that. 1, 2, 3, 4, 5. Oh, so this would actually be the degree below that, but we've run out of degrees, so I'm going to just cheat and just choose micro, because it would look like this, and that means that what we would have is a 1 minuscule. That would be our wave 2, and here's our wave 3, right? We'll get to that in a second. Can you see how the logic flow of, like, well, it's almost like, you know, those quadratic equations or Sudoku or something. It's like, you know, some of the solution over here. So if, like, you know, x, okay, I'm not going to make up a quadratic equation, but you know what I mean? You've got x2 plus y equals this, and from that you can sort of, well, if that, it's like following the logic. Well, if that is that, then that means x must be this, and if x is this, then y must be, you know, it's that kind of thing. So because we've got this impulse down here, it's like, okay, what does that mean? If there's an impulse here, well, that would mean, could that be the C of a correction? Well, if that's a C, this has to be an A. Oh, yeah, this could be an A, this could be a leading diagonal. But without getting this C, like if this was covered, and you can obviously see through, but if we hadn't got there yet, yeah, I wouldn't have thought that, because this was kind of sneaky. It's not like again, leading diagonals are sneaky anyway, so I call them the evil brothers. Hey, Attila. Yeah, look, let's look at are we getting any divergence? Yeah, we didn't get any divergence, and you saw what I said yesterday, so I would have expected another move down, because that means that this 3 isn't complete yet. Oh, actually, no, we've got some... We're in the 1 minute. Well, first of all, what kind of wavefall would we be expecting if this was a... That's a 50%, so a quite shallow wave 2. That means we'd expect a deep wave 4. So yeah, I still think this is all still wave 3, which means we've got a sort of a deeper wave 4. A base channel is not going to help us. This is blown up a lot more than the base channel. Well, let's put a base channel in there anyway. I mean, look, you can see the base channel's there, right? Look at it. And price like hit the top of the base channel and exploded through. And we're going to keep it on anyway, just because why not? Oh yeah, these should be colored red. There we go. There we go. Here's our potential deep correction. But I don't think it's going to come all the way down to here, but it's worth keeping on the screen anyway. And so I'm happy with that. This is kind of cool because think about this. Like, let's zoom out. Oh look, it hit the lower parallel. This is beautiful. Okay, now this is really nice because I mean it's still quite far away for a stop loss, but it's hit the lower parallel. It's also hit the 707 perfectly. So we can get rid of these ones, right? And this is the the B wave. And again, zooming in, we're thinking this is the third wave of our, again, we should change this. It's not WXY. This is an A. We've labeled this as an ABC now. We can update that. Okay, so we've got, if this analysis is correct, we've got a deeper correction, and it should, because this was sharp and shallow, and so law of alternation says that just in terms of probabilities, not definitely, but we'd be kind of looking for a way forward to take a little bit of time here and come a little bit deeper. We'll see. Who knows? And it means we'll get one more push down. And look at that. Look, this is the cool thing, right? That if we do get that, we do get that last push down, and I'm going to do some, maybe have some pitchforks, add some pitchforks in here as well. We'll see. That final move down, we zoom out, that's going to give us our second touch of the lower parallel. And for me, the second touch of the lower parallel, if combined with other confluence of what you're expecting, is entry territory. Now again, not trading advice. I'm not telling you guys what to do. And also I'm not, we're not doing this, I'm not actually trading today. So in the future, in the near future, we'll be doing it. We'll be, like I said yesterday, or the last few days, we'll have a sub account, and we'll be doing it live. But it's hit the 707. We've got this nice corrective structure. We're happy that we've got a leading diagonal correction, and here's the impulse. And so if we get another push down and we see divergence with the volume, the momentum, can you see how this is what I'm talking about when I say there's confluence. You're not just relying on Elliott wave on its own like some sort of purists out there. You're also not just relying on market structure. You're not just focusing on divergences. You're also not just doing market geometry. You're like, each one of these methods just kind of works together so well. And this is probably why learning from me is maybe more frustrating than maybe learning from other people who are promising like quicker, faster results, because I'm teaching a lot. There's a lot that I'm teaching, but can you see when it all comes together? Can you see that? Now, I'm not saying, look, price might just collapse. So, because I don't know what's going to happen. No one knows what's going to happen. That's the whole point. That's what I'm trying to express to you guys. I'm just sharing my thinking as I go. And I think this is the fruits of committing yourself to learning all these different methods. And look, I'm still learning. I'm still learning. There's so much I still don't know in terms of all the possible things to know. But I'm actually looking forward to, once you guys all get to that point where we can go exploring together. We can bring people into the channel, interview them, and we can learn more things together. Like the next level that I want to get to is when I start to incorporate order flow, and that's a Pandora's box that I've dabbled in, but it's something that I want to go really, really deep on, and then I can take you guys on that journey with me, because I get the sense that it's going to complement everything that I'm doing, and therefore everything that I can share with you and get you guys doing potentially really, really well. But I haven't seen anybody combine Elliott wave with market geometry, and especially anyway market geometry and order flow as well. And I kind of feel like it would be the cherry on the cake. But so far I'm liking this. But again, let's just sober up, take everything off, and let's think how could we be wrong? How could we be wrong? What could be happening instead? Well, we could be getting an expanding triangle. I mean, I think this is impulsive, so I don't think so. But you know, maybe. Oh, well, look, you could be getting an A. I mean, that's impulsive, but you could say a B, in which case you'd get a C and a D. I mean, that would be a huge triangle. So I don't think so. But can you see what I'm doing? I'm like trying to step back and ask, how could I be wrong here? What else could be going wrong? What else could be going on? There's the potential pullback. Let's zoom in again. There's the start of a pullback. If we're looking for a deep retrace, let's do a Fibonacci retrace just to get us our levels that we're looking for. Wave 3 retrace. There's our levels that we'd be looking at. And a deep retrace, I mean, look, I wouldn't expect it to go to the 0618. That's too far. But the 50%, what do you guys think of this hypothesis? That we've got the A here, we've got a triangle B, and then this is the leading diagonal 1, 2, impulse 3, which is still undergoing. There's the deep wave 4. We've got, well, I say deep, it's gone to the 38.2, so standard, but it looks like this is the first leg, another move up, and then another leg down. It might even take us to the base channel. You guys are being awfully quiet tonight. The first person to say something in the chat, I'm gonna honor up here as the line of honor. Who's gonna be first? Shirley. Shirley's the line of honor. This is how we spell. Is that honor? Is that wrong? Am I spelling? Okay, it's not the line of honor if I spell honor wrong. Because like I think English and Americans spell it differently. I think that's how English people spell it. Yeah, so Shirley's the line of honor today. I think English people spell it like this. I think, by the way, I think I'm dyslexic. And so is Richard Branson and lots of very highly intelligent, creative people, by the way, so it's not a bad thing. So, Master J, on Binance, the second bottom of the double bottom is lower, so my count is a bit different. Okay, interesting. You mean this point right here, right? You've got these the tweezers. So on Binance, it's a little bit deeper. So that means, well, all that would mean is, well, I suppose, yeah, your 5 would be here, and that, yeah, that just changes things a little bit. But price is responding to this one, at least on this market. So I'm happy just focusing on, what is this? This is KuCoin. Honor, yeah. So I think Americans spell it. I'm pretty sure Americans spell it like that, but you know, this is the English language, and we invented it. I say invented it. Obviously, it's, if you follow the roots of English, it goes to like, I think the Germanic, then Anglo. What was it? God, I used to know this stuff. Anglo something, Anglo-German, Anglo-European or something like that, and it goes down and down into this like this tree. So English didn't invent English. It's like, you know, influenced by. God, I'm going to make myself sound stupid. I'm going to stop immediately. Luke says, sorry I'm late, have I missed anything? I'm afraid so. Just before you showed up, I actually told them like the secret to how to make millions in seconds, because I've been holding back from you guys. Anglo-Saxon language, I don't think that's it. It's like Anglo, it starts with Anglo. I remember seeing this infographic that showed all the languages and then their roots and their roots and their roots. Indo-European, that's the word I'm looking for. Indo-European. That's like the category under which you have the Romance languages, the Germanic languages, and all that kind of stuff. Yeah, Luke, I'm sorry, man. It's because I've been holding back on you guys. All this talk of like, oh, you've got to manage risk, and you know, don't risk more than 2% of your account. Blah blah blah. It's all a lie. It's all a lie. Really, there was just a few little like there was a trick, right? There was a magic bullet that where you're guaranteed to succeed, and I was just holding back, but I don't know. I just felt, because I think because we sold all the founders NFTs, I think I just felt a bit like, yeah, fuck it. So I told everyone, it was good, wasn't it? What the secret I told you. Let's make Luke feel really bad. It was pretty cool what I told you, right? That amazing secret, right? Like, you guys know how to be billionaires now, right? So, rewatch the stream. I'm afraid. Yeah, I'm afraid I'm deleting the stream. I'm deleting the recording. I'm afraid, Luke, because I can't let this secret get out. I mean, come on. Because if everyone knew that, it would be a bit much, wouldn't it? Look at that, Master J. He's already made 65,000 euros using the secret in the last 12 minutes. See? Ah. You can imagine that'd be one of these like testimonials on like one of these like scam ads. It'd be like some guy looking like an actor. He would say exactly this: I already made 65,000 euros using this secret just in the last 12 minutes. And it skips to the next person. I made £100,000 and I didn't have to even get off my couch or learn anything. It was easy. Chris, do lower volume coins produce correct structure? Is there a minimum that you trade? I mean, yes and no. I mean, it depends what you mean by lower. Like, you know, like Ethereum is lower than Binance. Sorry, than Bitcoin. You know, so as long as there's liquidity, because again, like, what are these wave patterns that Eddie Wave Principle talks about? Well, these are the wave patterns that are produced by crowd psychology. And at the start of the last book that Ralph Nelson Elliott wrote a few years before he died, which was called Nature's Secret or something. God, I used to have a physical copy with me, but I lost it. Nature's something. Who knows what it is? It's Nature's something. Nature's Rule or Nature's Secret or something. And at the start of the book, he talks about how he just used financial markets as a great way to show these patterns, but it wasn't that these patterns were only a product of financial markets. He was talking about how these patterns emerge from lots of human beings coming together and sort of acting voluntarily in response to how everyone else is acting, and it creates these patterns. And he just used financial markets as the perfect way to demonstrate that, because that was a perfect environment where lots of people are acting. There's enough people in order for these patterns to emerge. But there's his argument was, as long as there's enough people, you will find these patterns in other areas. And so, to answer your question, as long as you have the liquidity, then these patterns will emerge. But in my experience, in lower liquidity tokens, as long as you're zoomed out enough, so in other words, you're seeing enough liquidity in that time frame, yes. But the caveat is the lower the liquidity, the more potential there is for fundamentals manipulation. If you've got a token that isn't very liquid, but you zoom out enough and you can see the patterns, and the tokens are already distributed amongst lots and lots of people, you're going to get the patterns emerging. But if you've got very low liquidity tokens or very new tokens, the chances are there's going to be some individuals, some early investors, again depending on their vesting schedule, but you're going to get very very real practical fundamental things influencing supply and demand. That is outside of the realms of Ralph Nelson Elliott's observation on patterns that are emerged as a product of crowd psychology. You're going to get investors dumping into a relatively low liquidity market that will dump the price. It has nothing to do with crowd psychology. And so the lower the liquidity or the newer the projects, you have to factor that in. You've got to worry about that. And that's why the safest place to learn Elliott Wave is going to be the most liquid places where there is the least manipulation. Now, there's going to be manipulation everywhere, but the kind of manipulation that you see in Bitcoin, in my experience, in my opinion, I suppose to some degree, it doesn't really negate Elliott Wave Principle, like the crowd psychology patterns, too much. Sometimes you get a crazy move, which is like a stop loss hunt, and that might make no sense if you don't go, well, okay, that was a manipulation. If you exclude that, my wave count makes sense. There'll be moments like that, but generally, Bitcoin, Ethereum, these high liquidity markets are fine. Luke says, but we all didn't tell Luke, so don't tell that guy. What guy? Oh yeah, I think Master J's thing. Well, Master J is gonna, he's off now. He probably doesn't he won't be on the stream again because, once I've told the secret, that's it. Okay, let's zoom in here. What are we seeing? It's kind of hard to see. We're on the 1 minute already. We can't go any deeper, at least yet. Oh, Luke says that was your scam testimonial. So, what's this? Is this another leading diagonal? It's kind of curving around, isn't it? So it's not really perfect leading diagonal territory. You could get a 1, 2, 3, or 1, 2, 3, 4, 5. Maybe. I'll pop this. Not really. I mean, we'll get another correction down, so it could just be a ABC, sorry, ABC X, ABC, so WXY, and this is the, so we could be getting a either a, you know, something like that, and up to the base channel. Well, I can't see it going past the 618. So let's just say here is that like kind of an extreme example. I can't see this being the entire correction. It just feels a bit weird. I think that looks like that's the first leg. Whether it's a, I don't think it's leading diagonal. I think it's just a regular kind of WXY. So this is minuscule, isn't it? Yeah. So we've run out of degrees. So yeah, that's all overlapping. So I don't think that's impulsive. So I'm going to just say that we've got a W and we're going to have an X and then a Y, and that's going to be in, we've run out of degrees, but it would look something like that. And if this is the X, well, could we expect the X to come from, to go down to, oh no, sorry, this says wave W retrace there. Okay, that's what we'd be looking at. So it could be anywhere around here. And oh yeah, so should we look at any pitchforks to help us maybe? Well, let's see if we can find something that's helpful to us. That's interesting, isn't it? I think this one's interesting, isn't it? Look, I mean, this is exactly just going with our, you know, A. This is where we've marked as the change of the trend here to here, and look, price has hugged the top of that upper parallel beautifully, perfectly, and then price has come down and it's hit the bottom here. It's come up and hit this median line. So I'm really liking this geometry. Let's keep that up. Let's keep Shirley in the shot. Shirley in the shot. Shirley in the shot. Might have to make you smaller, Shirley. There we go. Stick you up there. Nature's law. That's it. Thank you, Chris. Let's go back down into the 1 minute. Yes, look at that. Beautiful geometry. Really cool. And that's it. Like, how do you know if the pitchfork you've chosen is right? How do you know if the geometry you've chosen is right? Well, it reflects what price is responding to. Let's make this a bit smaller and dashed so we can. Beautiful. So cool to see. I love market geometry so much. I mean, is there a chance that this is the fourth wave completing at the median line? You know, maybe, and we'll see. I mean, you know, because again, we're not trading this. So if this does come down here, like goes past this, and it's impulsive, then we'll scratch this off as this is the correction. Because I said that I think this is a W. This is a correction itself. So absolutely, this could be the fourth wave. So if this kind of does a correction move and then starts to make its way higher, then okay, WXY. And if it starts to, if this is impulsive and it goes boom, third wave, you know, then, and there's a nice divergence, then man, I'd be looking at this. I'd be looking at this of like, ooh, like, it's just the stop is ages away. That's the thing. But what's the potential target up here? That still might be fine in terms of a 3-to-1 reward choice ratio. At some point, not that it's needed right now, but at some point I'll make a bunch of you guys moderators on whatever platform you prefer. Can you make people moderators on YouTube? I know you can on Twitch. Obviously we don't need it now, but once the channel starts to, people start random start showing up, then we're going to need people to manage them. Oops. Okay, well look, if that was let's have a look, let's zoom right in. So if that's a wave 1, 2, and this is a wave 3 and 4, and we get one more push down, and then we get deeper correction, this is maybe looking impulsive. And this is where later, when I get settled in Warsaw, I'll upgrade this trading view so we can go down into like the seconds one, and then we're in scalping territory. But then we can see the subway structure of some of these things at this level. Am I making you guys yawn? Come on, there's the push down. So so far this is looking impulsive, right? Wave 1, 2, 3, there's the volume, sideways correction with the 4, and we should get another push down. Here it comes. My God, I think he's psychic. What's the wave, Attila? Or that I'm making you yawn? There we go. Divergence so far. See that? It's hard to see at this level, but so far there's divergence. I mean, it could change very quickly, but so far we've got a 1, 2, 3, 4, 5, and so far we have divergence. And now if this pushes back, then I'm looking at this as an impulse. But that's fine, because it still might be part of the X. We might have an A, a B, and a C for the X. Again, that's fine. And so the real test would be, because look, when this comes, again, assuming that's the finish of the 5, 1, 2, 3, 4, 5, come back with a correction. What do we do then? If we've got a 1, 2, 3, 4, 5 and a correction, and we've got a 1 and a 2, and we start to get a push down this way, what are we going to use on the chart? Anybody? What are we going to add to the chart? I wonder how many people I've made yawn. What are we adding to the chart if we get a wave 1 and then a wave 2? Come on, guys. Once we've got a wave 1 and then a wave 2, what do we add to the chart? Okay, here comes the wave 2. That's assuming this is a wave 2, of course. Shirley, base channel. This is why Shirley is the line of honor today. Okay, so if this is the 1, 2, 3, 4, 5, and now this is the correction. So it depends. We'll see. If this launches upwards, then then we've misjudged this, and this is the X, and it stops at exactly the 50%. Fine, and then that's great. Then we get a nice deeper correction here, beautiful, and then we'll be expecting the impulse down. But if this is a wave 1, then let's look for the wave 1 retrace. If that's the case, can you see I'm just keeping different possibilities open, right? This is the wave 1 retrace. Okay, let's watch, see what happens. This is like, is that like an impulse correction, a C, right? So if we get a correction up and then we start to get a move down, we can add the base channel, and then that base channel is what we're going to use as our guide to see whether we are going to stay within a correction, like an A, B, C, and that C would be impulsive, but it would stop usually within that corrective channel. If on the other hand this is a 1, 2 and a 3, then that impulse is going to take us outside of that channel, and when you see that, you're not looking at an A, B, C, you're looking at a 1, 2, 3, and that tells you, that scraps the idea that this is a correction, and that tells you this is an impulse coming in this direction. And so that would mean that the 4th wave has completed and now we're in the 5th. Understand? Comprende? Whereas if this is a correction and we're getting an impulsive coming this way, or we just get a move that goes beyond the W, then the chances are that this is a W, an X, and the Y is going to take us up here. So the impulse hypothesis would sort of do this, potentially. Oh yeah, and this this indicator, you see these lines, it actually shows us divergences. So we've got a divergence here, right? That line shows up. Divergence here. Have I got that same indicator set up on my other ones? I don't think I have, actually. Why haven't I got it set up? So here is the OBV divergence LB. Yeah, it's a different one. But I've got it set up there. So it's set up on Binance. It's not set up on KuCoin. And yeah, it is set up on Bitstamp. Let's correct that. Unbalanced volume with divergence, is that it? Yeah, that's it. Yeah, that's it. Now, obviously, when you first get the unbalanced volume, you turn it on, it looks like this, right? It looks nothing like what I like to have it on, so I just change all the settings. So the style, regular bullish, I change that to that. Regular bullish label, I take off the labels. Hidden bullish, I don't use that. Hidden bullish, I don't use the label. Regular bearish, I change to my nice pink. Take off the label, take off the hidden, take off the hidden. Zero line, do I use the zero line? No, I don't use the zero line. The oscillator, yeah, I do. And then I change the colors to that and that, and you can see it's starting to shape up. And then the OBV line, I get rid of that, and yeah, I get rid of that, I get rid of that. That's it. Change the thicknesses of the lines, and that's looking pretty good, isn't it? There we go. And now I will delete that, and I will click and drag this into the main screen, and there we go. Beautiful. And then what you can also do is Command C. I just copied it and again drag it in. There we go. Oops. And the reason why I just drag it in is because it's the most important thing. You'll see me kind of like pop in here quickly, and you know, there's some of these that I need to explain maybe at a later time. But I'll quickly look at them and then I'll come back. But I use the volume all the time, so I will keep the volume there, you know, all the time. It's just, I just like it on screen, you know. But I'd probably want to dim this down a touch. Yeah, like 25 or something. Yeah, that's fine. All right, so where were we? Okay, what are we seeing here? Could that have been the correction and then is the beginning of another impulse? Maybe. Let's do a nice little, let's get rid of these, we don't need these. We know what we're looking for. And so let's look at if this is, I mean, this could be the bait. We'll see. We will see. Wait, that can't be right. What am I doing? Sorry, I'm not paying attention. Sorry, what am I doing? There we go. But still, it's broken out the bottom of that base channel, which is not going to happen. So this might still have another move up to go, like impulse. We'll see. It's hard to see. You know, we're in the 1 minute, and I kind of I'd go deeper and get more definition, but I'm not allowed. I can't. So we've got to just work with this for now. But this is all corrective here, right? That makes me think this is and we've got another move up as a correction to take us to the potentially the 61.8. Yeah, we'll see. Because this looks corrective in here, but I can't see. I just can't. There's not enough detail. But just looking at this through this like low resolution, it looks like a sharp move, correction, and maybe another sharp move upwards. Again, if this is an impulse, we don't know yet. We don't know. If we are looking at this as an axe down, then this could be correction. This whole thing could be a correction. Then we get another move down. That's fine. But this level of detail isn't really tradable. Okay, so it's 19 minutes to the hour. So I'm going to go on for another 19 minutes. I'm going to aim to make it a nice, clean 2-hour stream. Which means it's like 1 minute, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19. So, you know, at the very least, if this is the next wave here, that should complete by the end, and then you guys can watch if this does transpire to be a Y taking us deeper, and then you can watch to see if we do get that final push down. And then when we can come back tomorrow, we can that'll be the last stream of the week. Let me see, today's Wednesday, tomorrow is Thursday the 2nd, and then it's Friday, Saturday, 3rd, 4th. I'm going to Warsaw on the 4th. Then yeah, so then I'll be back on Sunday in Warsaw, and that's assuming, by the way, when I get there, I can get everything set up. So we'll see. I'll let you guys know in the network. Worst case scenario, we can't do it Sunday and we've got to do it Monday. But the next time after tomorrow, we come in together. I'll be in Warsaw. I'll be hopefully nicely settled in Warsaw. So yeah, so when we come back tomorrow, given everything I've talked about today, it'd be interesting to see. Here we go, there's another push-up. Boom, told you. Aren't I a bloody genius? Then it'd be nice to come back tomorrow and see if that's transpired, and if we got that really nice second touch of the lower parallel, and then we got like a really nice move up. So if we did get that second touch, let's say there, and then we're shooting for, what did we say, these levels up here, so the minimum is here, but given the size of the A, if this is a B, let's look at the Fibonacci extension, sorry, the trip based on it. If this is the A, if the B does come down to there, then yeah, the minimum would be here, but the next level would be there. Let's say that was the target, and that would be, let's say, you know, up to the level here. Then it's not, you know, the stop loss way down here, it's not quite a 3-to-1. It's not, and this is a big stop loss. So if I was going to go for that, to be honest, if we come down and get and like it's the final 5th wave, I would put, if you are going to get into this, I would do it with like a really, really tight stop loss. Normally you want to hide your stop loss behind market structure. Are we seeing any volume profile? Anything interesting? Yeah, not really. There's a point of control here. I tell you what, we've got a point of control that continued on as a naked point of control here, and that coincides with the 786. So as a nice relatively tight stop, you could put it here, and that gives us a really nice like 7.4-to-1, or you could be really conservative down here. Like that's really nice. That's, you know, that's only if when you go deeper. So that's my, okay, so that's the correction. I think that's the correction there. Right, so in other words, if this is a wave 1 and this is a wave 2, then wave 3 should break out the bottom of this base channel, okay, and then wave 3, 4 maybe bounce on the base channel, and that's going to come down and give us that final 5th wave. If this is going to go A, B, and then a C that comes down in an impulse, and it's like looking to stop around here, then that looks like we've got a W, and that's the X, and we've got another push up, right? Make sense? Can you see what I'm trying to lead you towards? Yeah. So if we get that thing I'm looking at, and we get the move down, well, that actually would be expecting to come down further. It should. We'll see. But let's say it breaks down slightly below the lower parallel, we can have an even tighter stop loss. And then we've also got this point right here, which is slightly below this naked point of control. So I guess right just below that would probably be where I'd put it. And again, the usual risk management, never risking more than 1% of your entire trading account if you're learning, or less. And if you haven't done simulated trading before, 100% you want to be simulating your trades. But this will be a fun one to simulate if you haven't started simulating your trades yet. But again, I'm not saying it's too early to say yet. You don't know yet. That's something to watch how this transpires. But yeah, we've got another push down now, so it looks like that was the end of that move, and it's just shy of the 707. Which was just at the 382. So now it just comes down to this base channel is going to help us see whether this is a wave 1, 2, and the 3 is going to come down below the base channel, or we've got an A, B, and then a C. Right? At least that's just assuming this is the correction here. But it does look like this is a nice corrective kind of... Yeah, it does look like a nice corrective shape so far anyway. But also, if this is the X here, and this is a wave 1, wave 2, and if this is a wave, you know, if this breaks out the top of this, then, you know, we might be seeing the beginning of this Y and a much, much deeper correction. We'll see what this does. But can you see how, and again, this is, I suppose, my style, what I'm not worrying about and getting anxious about and is trying to guess what every single move is going to do. That's not what I believe trading is. You can see, as I'm just chilling out, and like, I know there's no money on the table right now, so it's easy to sit here and be all chilled out. I know that. But can you see that I'm not trying to know what's happening all the time? I'm just looking at the chart and I'm just letting it speak to me. Just letting it speak to me, and then through the process, I'm then, well, okay, I think the probability so far is that this is transpiring. Let's see what happens. And if that is transpiring, I think that would be the perfect trade. Let's see if things move towards that direction. And then there'll be some situations where it, you know, there might be some slight tweaks and changes, but it moves towards that. And then it's almost like, you know, the target, it just kind of goes right, and there it is, and there it is. And then you pull the trigger, bang, and you were looking for it. It happened, and you just waited. You waited for it to come to you, and then you pulled the trigger. Right? You waited for it to come to you. You just let the price speak to you, let the market geometry speak to you, and don't fret. Don't be FOMOing into things. And you know, that's, I think, you know, I'm sure there's people that have different strategies and styles and all that kind of stuff. I think trading should be relaxed and chill. But that's because I'm a swing trader by heart, I suppose. But can you see what I'm trying to get you guys to? I'm trying to get you to think in a certain way. If you're tense and like panicky and unsure and stuff, I think you're looking at this through the wrong kind of operating system. You're expecting something of yourself which is actually impossible. No one knows what's going to happen. This is chaos. This is the product of thousands and thousands of individuals making emotional decisions. Here we go. So I think, so it looked like sort of a condensing corrective pattern there, perhaps like a double combo. We'll see what happens. But it's I mean, this could be, for example, WX. This looks like a really nice leading diagonal, actually, like really kind of a. So this could be WX and then an A, B, and then we'll get another C. So, but can you see? I'm like, it could be this, it could be this, it could be this. And whenever there's like, it could be this, it could be this, it could be this. I'm not trading it. Then I'm not trading with it could be this, it could be this. If you try and trade when you're like, it could be this, it could be this, it could be this. So that's where the stress comes from. It's like, oh, it could be this. I'm stressed. I don't know. Don't trade when you're in those positions where it's like, it could be this, it could be this, it could be this, it could be this. That's not when you should be trading. Just accept what is. Just chill. It could be this, it could be this. Okay, let's watch. And so most of the time, you are going to be in a state where you're like, oh, okay, could be this, could be this, could be this. I think this is my favorite. Okay. But there's no stress, there's no fretting, because I'm not trying to make something, I'm not trying to force order when there is chaos at the moment. You just be patient. You have an idea. Yeah, I think that might happen. If that does happen, then I think there could be a trade right there. Let's watch. And then there's going to be times where it's leading up to it, and then other stuff's going on. And when you get to that point where you thought could be an interesting trade setup, there's still too much. Yeah, but it still could be that. Or then you don't trade. Right? No FOMO, no fear of missing out. No like, oh, I suck. I should. A real trader would be more certain, and like, no. That's just a story in your head, right? That's bollocks. Just be patient. Hopefully that makes sense. We've got 8 minutes left. I don't know if this is helpful for you guys. I hope it is. What I was talking about yesterday, we've got, so this move upwards was breaking this market structure right here, right? Higher high, higher low, higher high, higher low, higher high. We haven't broken this upward market structure yet, right? It's moving down, but we've got to break this market structure here for a sign that this is now going to change direction. Cool, you guys are liking it, very cool. Oh, sorry, 1 second. Ignore the noises. Okay, so we're looking at this market structure. If it breaks down below here, then it's a sign that this correction is over. Almost. There it is. And so, yeah, this looks impulsive so far. Maybe. So could this be the A and a B and then the C? And so we've got the X to come down here. Again, that's assuming this is all a correction, right, inside here. In fact, let's make this the same color. Actually, that would be there, wouldn't it? There we go. And so if we get this, that's impulsive, that's corrective. I mean, you can see impulsive, corrective, right? Beautiful. Impulsive, corrective. If you get a nice impulsive here, then this is the correction and this is the X. And then we've got our Y to come. Which could take us just nicely to the base channel, which would be quite nice. And it would be deep like the law of alternation was suggesting. We've got a shallow wave 2 here. That should be this color. Shallow wave 2. 0.5 isn't super shallow, but it's shallow for a wave 2. Didn't reach 61.8. And so at least 50% would be what we would expect given the law of alternation. So far I'm liking this. It's broken that market structure. Oops. But again, I can't go any deeper. It's kind of looking at this with your eyes kind of slightly closed. So if it comes down to this level and then turns around, then I'm pretty confident that's a nice X. And you could even, at that point, you could like do a nice, you can, again, regular and I haven't used the anchor here, but you could just do a regular and a modified as well, you know, and then you would use this to potentially look at this as a, like, there you go, like, nice target there, you get the idea, energy point, boom, you know. And then for those of you, those are the fifth wave hunters out there, potential short, but then again, you can, where you're going to put your stop, it's kind of tricky. But again, if you're getting like a nice clean pattern, that's your prerogative. Right, yeah, 3 minutes left, so I'm gonna leave it here. Okay, so that was today's Decentralist, and I have more ambitions for the Decentralist than just being me looking at charts. I've got loads of other really cool ideas, but we're just starting this way. This just, you know, you've got to start somewhere. I'm also in an apartment where I feel like I want to keep my voice down. You can probably hear I'm being a bit hush hush. But once, eventually, the vision is to get a, and this is after I decide, let's say I decide I do want to stay in Warsaw. Let's say I decide that. I don't know if I'm going to decide that, but let's say if I do, then the ideal situation is to actually have a proper studio, and then I can start to, you know, make it look really cool, have like Bitcoin logos in the back and all that kind of stuff. And because it'll be my own isolated studio, I can scream and shout and not have to worry about neighbors and all that kind of stuff. Oh, shit. Yeah, you're welcome, Shirley. And once I've got a slightly beefier PC, we can start to bring on other people, and we can have more fun with it than just me on my own talking, which, as entertaining as that is, it's more fun for me if I'm having a bit of banter with someone live on stream. And I also want to interview people in the space, people who believe in the values of decentralization. I want to start to make this a vehicle through which we as a community can really become more integrated into the broader blockchain crypto space, and what I think is going to be a decentralist movement. So rather than just being us looking at charts, which is cool, and there's definitely a huge place for that, especially with you guys learning, but I think there is so much potential with not just the decentralist, but obviously the broader vision and thing of what we're trying to achieve with King Silver. Cheers, Marcus, you're welcome. So yeah, that wraps it up, man. Let's finish here. And for those of you who are going to keep on looking at these charts, yeah, keep an eye. So let's just have a quick summary of what we think could happen. I think we might, just looking at this, I think the odds are we're going to get a push down, you know, to there. That's if this is an X correction. If this is an X correction, and then we'll get the final move up, probably to the base channel up there. That's if this is the fourth wave here. If this was the fourth wave here, and this was the first wave, the correction, second wave, and then we've got the impulse coming this way, then we'll get this breaking right out of this base channel. And as soon as that happens, that's when you would then think, okay, I think this was the fourth wave here. And now the fifth wave is underway. I think my preference in terms of probability, because we're expecting a deeper wave 4, I kind of think that we are going to get a rejection up here and then a push this way. I get that. That's what I think in terms of probability. And if that happens, then the final push will be, you know, let's say something like that, but obviously broken down into its 5 waves. And if we do get that, I believe we're going to have some really nice divergence with volume and the momentum in the RSI and the MACD histogram. And then if we zoom out, we will see that down here as a second touch. It will pierce this lower parallel down here. And if all those things combine, then I'm gonna set that right there, and that gives us a 7.93 to risk to reward ratio from the lower parallel to the median line you know, that gives us at the very least a 3-to-1 roll trust ratio. This is not trading advice. I'm not trading this for real, so it's easy for me to sit here with nothing to lose, nothing to risk, saying, oh, I would do this, because trading for real is different than just simulated trading. So I'm not saying, oh, I would do this. I'm just, you know, saying it's something that we can look at tomorrow when we come back. All right. Yeah, you're welcome, Tony. You're welcome, Tony. And Marcus and Shirley. Wicked. All right, guys. Nice one. I will see you tomorrow on The Decentralist.